All right. Welcome back, you guys, to another episode of the Real Estate Investing Club. We have Adam Gower with us today. Adam has 30 plus years of experience in real estate, so we got a real master on our hands. He does commercial real estate, looking at distressed properties, and he also focuses on building crowdfunding platforms for commercial sponsors. So anybody out there who wants to raise capital and you want to learn a quick and efficient way to do it, Adam is the man to go to. So, Adam, thank you very much for hopping on the show.
Thank you very much for having me. It's nice to be here. And I will not show you anything quick and efficient. What I will show you is some hard work that will make your time significantly more productive. There are no quick fixes in real estate, just to make that clear.
That's absolutely true. I guess I shouldn't use the word quick, but efficient is what we're going for because we don't want to waste our time. All right, Adam, I told you before we got on here, we like starting with stories. So take us to the beginning of your story. How'd you get started in real estate?
Okay, so I will make this brief. I actually started pulling wires for an electrician in the early 1980s. And quickly migrated to raising capital for ground up multifamily deals, again, in Southern California. I ended up in, and then the savings and loan crisis hit, the early
2008,
1990s.
Oh.
And savings and loan was the early 1990s.
Okay.
I actually lost all my capital, everything I thought I'd earned during that time, and ended up running a division of Universal Studios in Asia Pacific. I was president of the division, and I did all of their commercial real estate development across Asia Pacific.
That's fun.
I then came back and in the early 2000s built up my own portfolio, sold out in 2007, right before the global financial crisis, and was hired by a bank, a major bank, to go in and help them with their real estate collateralized non-performing loan portfolio. So I worked on, actually in the course of a year, over $1 billion of notes, and helped them with divestments and workouts, and then ended up at Colony Capital, who had bought over $7 billion of non-performing loans collateralized by real estate together in partnership with the FDIC. And my job over there was to package some of the re-performing loans and sell them both to investors and to banks. And then once that run had finished, I started doing some seed and angel investment. And that's when I discovered the language of digital marketing. So that's about 10 years ago. And when the Jobs Act passed, allowing sponsors to raise capital online, I realized this is game changing. I've raised over $500 million myself, and it's all been in person for the most part. And so I realized that that process, the in-person process, is extremely inefficient. It's just time consuming. It's repetitive. You never know where you're going to get. It's just really hard work. So by bringing the efficiencies of digital marketing to your capital formation processes is frankly these days the only option. You have to do it because there are so many. It's still blue ocean opportunity, but there are a lot of people doing it. A lot of them are our clients. And they are the ones that are raising the capital. So that's what we do. We build tailor-made or bespoke crowdfunding platforms for sponsors so they can attract, nurture, and convert prospects into investing with them. That's what we do.
Very cool, man. I mean, it sounds like you have a huge breadth of experience. How'd you go, just out of curiosity, how'd you go from an electrician to a capital raiser?
Because pulling wires was interesting, and I worked actually. He was an electrician, but also a general contractor. So I saw really all aspects of what it takes to build from the ground up. Because I worked on job sites, and that's what I did. But I actually prefer working in an office. So I started, it's a long story, but I started calling around I actually started contacting venture capitalists because I'm very good at at raising capital. And this was, gosh, when was this? I don't know, early 1980s. It was a really long time ago. And one of the people that I met was a Japanese boutique investment bank or investment house, and they were interested in real estate. And so I introduced them to somebody that I knew and ended up raising money for that sponsor, primarily from Japanese investors in the 80s.
Interesting. I'm sure you have a lot of good stories going back then, but we're going to shift the conversation a little bit to more just crowdfunding.
Sure.
It is one of the, once somebody gets started in investing and they start to build their portfolio, they quickly run into the realization that you need a lot of capital to get bigger deals done. Right. And that's where you really want to be. You don't want to do small deals because it takes the same amount of effort for the big deals than it does the small ones. So, and then to do that, you need capital. And so it's a very important step in the investment process. But a lot of people get stuck on it. And so take us to what your guys' philosophy is on raising capital, and what people need to have in place in order to have an efficient system that brings them capital for their deals.
Sure. So I would say, look, I'm responding to your question spontaneously. So the very top of mind, you said, what do people need to have when they're raising capital online? I will tell you this: you need to have authenticity. Yeah, that's the number one most important aspect. You cannot fake it. If you fake it, you will run into trouble. Yeah. So at a high level, you need to have a robust lead generating, highly educational website. That's your home base for any kind of capital formation. And Gabe, do you mind if I don't want to speak up to him, but I wrote a book. Do you mind if I mention it?
Oh yeah, for sure.
All right. So there's one of my books actually is called Syndicate. I'm actually going to flash it up on the screen here. Okay. And so we build websites. We've been doing this for a long time. Our clients have raised hundreds of millions of dollars using our systems, and we build a lot of their websites. We analyze best of class websites, and we test extensively websites for capital formation effectiveness. And so in my book Syndicate, which you can actually, is the link at the bottom of the homepage at gowercrowd.com to the book, what I've done is I've actually broken it down into and I'll tell you what they are, kind of very high level now, but into the key components of what an effective capital formation, capital raising website needs to have. Number one, it needs to have a very good catchphrase. It's called the big idea. You've got to have a solid catchphrase.
Give me an example real quick.
Huh?
Give me an example.
There are three things that you need to incorporate into that. Okay. You want to incorporate the word you, because you are speaking directly to the conversation that a prospect is having in their own mind. And that conversation is always, what's in it for me? So use the word you or your, or some derivation of the word you if you can. Secondly, you want to use the word real estate, because if you've not got the word real estate, don't know what your website's about. The third thing you want to use is some derivation of the word invest or investing or investment. So those are your three key components for the big idea for your catchphrase on the homepage. The second thing that you need to have is you need to have a call to action immediately on the homepage that says, here, give me your name and email address in return for something cool. And then once somebody triggers that or submits that form, you want to be triggering automated email sequence of welcome emails. The third thing that is absolutely necessary is a robust educational component to your website, because the way that typically you will be raising money, and look, everybody's been through this, is that you meet somebody, you get an introduction. It could be a family member, or it could be a friend, or it could be an introduction through a financial advisor or attorney or accountant, etc. And then the process of educating that investor is a long and tiresome process. You have to meet them, you send them information, you do follow-up, you meet them again, you make a phone call, you do a Zoom call, whatever, right? It's a long, drawn-out, inefficient process because you have to do it multiple times. And Gabe, more importantly, it's inefficient for your prospects as well. They don't want to be sitting there being pitched. Yeah, I've got some deals. Can we have lunch? I'm going to be pitched. I don't want to sit through lunch and be pitched. I might not like the guy, right? Or even if I know him already, I still don't want to. I'd rather be able to do this in my own time, right? So it's a very inefficient way of doing it, is in person. But yet that was the only option for sponsors since 1933 when the laws changed with the Securities Act and prohibited general solicitation. You've got to do it that way. However, the Jobs Act of 2012 allows for what's called general solicitation. That means that you can now basically advertise. You can solicit online as long as you're using the right regulations. So your website is basically a representation of every single, or preemptively answering every single question that a prospect may have about you. What's your background? What's your track record? What asset class do you like? Why do you like that asset class? What's your investment thesis? What's your investment philosophy? Educate me. Tell me, what's the IRR? What's the cap rate? You need to be educating your prospects, preempting every single question that they may otherwise have. Because if you don't do it on your website, what they're going to do is run searches online, like what is the IRR or capital stack or something like that. And what's going to happen is somebody else's website is going to show up. In most cases, especially if you're on capital stack, most of the people that show up under that search term are our clients. And they're going to click on those websites. They're going to learn from those sponsors. Guess what? They'll invest with them and not with you. So it used to be that you could have a business card and wander around with a business card, and then you needed a website, and a website was generally just a pretty picture with a contact page. Today, mandatory minimum requirements, if you want to be effective, not just in commercial real estate capital formation, but in any business, is you need to have a solid educational lead generating website. And that's what the book Syndicate gets into in full detail.
Nice. I like it. So many questions popped up in my mind. I raise capital myself, and I'm always looking for it to improve the system. One thing that I've run into is trying to understand what the investors need to know, because there's a lot of when you have deep experience, deep expertise in an area, there's a huge gap between yourself and people who don't have that expertise. And so I always feel like I'm not giving the correct information to investors because I'm speaking kind of at a high level because I know investing, I know all the terms, I know everything, so I feel like I'm missing things out. I'm leaving things out. How granular do you generally suggest people go when it comes to education?
I'm going to give you a pro tip how to do that too, actually. All right, so there's a lot more to it. And we run programs that show you the full detail. We've got a 20-minute podcast today, so it's very limited. But I'll give you two key pro tips. Number one, here's how you do it. Get out your latest deal memo, right? You got a deal memo that you put together to raise capital. You sent it out to investors and give that to somebody in your family. Could be one of your kids if they are if they're a teenager, what if they can read. For halfway intelligent. In other words, they're, in the teens, right? They're not like little kids. Or give it to a spouse if your spouse doesn't know anything about real estate. If you can't do either of that, give it to somebody else, your mother, who doesn't know about real estate, and give them that deal memo and this important tool, this pencil, and say to them, please go through this and underline every word and phrase you don't understand. And then that becomes your content list. Then what you want to do is you want to create content about every single one of those words, dumb it down to a 5th grade level at the intro, and then dive as deep as you can. That's how you create your content. Second pro tip, while you're doing that, concentrate or focus in your mind's eye on your ideal investor. Literally think, who is the best investor that I have? Who is the person that loves taking my calls, invests in everything, and absorbs everything I tell them and only ever gives me positive feedback? Focus all of your effort when you are writing the content according to what your industry unexpert has underlined in your deal memo. As you're creating that content, write it specifically for that ideal investor. Write it to that person specifically. Put a picture up on your screen and write it to them. Educate them on those concepts. That is a phenomenal foundation for creating everything that you need. And don't imagine anybody knows or understands everything. We've got a client who is a $2 billion. Today, they're a $2 billion multifamily shop. They were 300 million when we started with them. And their head, their acquisitions guy told me, said, yeah, we sent out, I gave one of our deal memos to my parents, he said. And they said, their first question was, what's multifamily? Don't assume that people understand these concepts.
People don't use multifamily in regular word. They say apartments.
They say apartments. So he had to explain what that was. So everything warrants explanation. The nice thing, Gabe, is that while it can seem overwhelming to unwrap absolutely everything you know and put everything you know onto a website, it's not that difficult if you deal with it systematically. Do one article a week. Your articles need to be 1,000 words long or more, preferably. Ideally, you would record video as well, but that's a whole different story.
Gotcha.
And if you do one a week, by the end of the year, you've got 50 articles. That's 50,000 words. That's the length of a good novel, a short novel, but it's the length of a novel. And now what you've got is a resource that your prospects can refer to that expresses your personal understanding of this industry. And why is that important? Don't do it on a chat GPT. You will insult your prospects. They'll see through it and you will fail, period. You've got to do it yourself, right? But then what you can do with it is you can push that content out on social media. And that's how you start to create and accelerate or elevate your visibility online. You become recognized as an authority. Your prospects start seeing you everywhere. Prospects who have never heard of you will start seeing you. They will click, they'll navigate to your website, they will learn more from it, they'll see that you are a genuine article, they'll sign up for your email list, if provided you've got good lead generation forms on every page. That means a sign up to my newsletter kind of lead gen form. And then they will become part of your ecosystem. But it's a robust, automated. And the other thing is that once you've built it, it's there forever. Gabe, you only have to do it once. You don't have to do it again and again. I mean, you do need to continue feeding the machine. You need to have a newsletter at least once a month, ideally once a week or once every 2 weeks, but at minimum once a month, that goes out, that's educational and not raising capital. That's how you continue to nurture prospects. But once you build an investor acquisition system, it just runs on autopilot. You need it. You cannot, it's no longer optional. It's mandatory if you want to be anybody in commercial real estate.
Nice, man. Well, you've already inspired me. I pulled up my website on the side here and I was just kind of taking a look at it, comparing it to what you're saying. And I definitely could use work. I don't do nearly as much education as you say here. And I mean, I looked at the clock, we're already run down the time, but one last question that I have is, you're talking about all these different topics that you're educating potential investors on. Where are you talking about? A blog that you put it on the website, or does each educational topic get its own page? How do you generally structure
all
that?
Articles. They are evergreen, so they're not time sensitive.
Yeah.
So if you're going to write about what to do during a downturn, don't talk about this downturn. Talk about real estate cycles and the different phases of the cycle and what to do in a downturn. That's a green That's an evergreen article. So that's how you want to structure it. You also do, it's also desirable to have a blog that is timestamped. So you might want to talk about, interest rates today, or what's going in the market today. But those are timestamped. Your evergreen content, which is what I was talking about before, that stuff doesn't have timestamps on it. Those go on pages on your website with lead gen forms embedded in them, and they would go under an education section. Again, it's all in Syndicate, gowercrowd.com. But if you, those are all standalone evergreen articles that, and you also want links between the articles pointing to each other. That way a prospects can navigate from one article to another. There's all kinds of other kind of cool bells and whistles that you can incorporate, but at the high level, those are foundational.
Nice, man. Well, that is great advice. Again, if you guys want to get the real nitty gritty, the book is called Syndicate, and we will put a link in the show notes. You can pick that up. It sounds like it's very worth it because raising capital is one of the most important things you can do. So if you have some kind of system that just brings the capital to you, so much better. I've tried the phone version where I'm just calling people, and it's a nightmare. So I love everything you've shared so far. We have run through the time, so it's time to jump into the quick question round. Are you ready?
Yeah, absolutely. Thanks, Gabe.
Let's do it. Starts with books or any form of education. Give me 2 recommendations, one for real estate, one for general life wisdom.
Oh gosh, yeah, I really should have prepped for this. Actually, I'll tell you, I'm actually reading a book at the moment. I really like it. It's by a fellow called Ari Rastegard. It's called Something to Fail, Gift of Failure.
Okay.
Yeah, it's really good, actually. It's an interesting thesis. Most of the things that I do fail. It is on a podcast admitting that. But that's because we test things all the time. We test ideas all the time. And 9 times out of 10, they just crash and burn. But once out of 10, they are phenomenal successes. And then we double down on those. And the other one was what? Is a non-real estate?
General life wisdom.
General life wisdom. Gosh. Yeah, I would say this. So have some fun. This is not one that you'll hear about very often. I'm going to suggest, I think, probably the Robert Collier letter book. I'm looking at it on the thing. It's a book that has the most spinal breaks. It's like the spine is curved because I've read it so thoroughly. I think it was written in 1920. Nice. And he actually talks about mastering direct mail marketing, direct marketing. And what's fascinating about it is all the concepts that were developed to sell using direct mail are absolutely immediately and directly relevant to digital marketing. Human psychology has not changed.
That is true.
And so when you look at the origins of direct mail and marketing, the way that the masters of marketing did it 100 years ago, it is liberating to realize that what you're doing when you get into the digital world is nothing new.
What was the name of that book again?
It's called the Robert Collier Letter Book.
The Robert Collier.
I'm going to stand up. I hope I've got trousers on today. I think. Here's the Robert Collier Letter Book. And look, You see the spine. It's all. But you see how I've.
There's been some use on that one.
The spine is thing. Yeah, look, and I've got notes everywhere. Yeah, it's really superb. I've even got a little note in it. I'm not sure what that is. Yeah, scribble notes on it. Yeah, this is really. It's long. I mean, it's a big book, but it's all kinds of examples of great campaigns, great direct mail campaigns that they ran in the early 1920s, and you can replicate them online. I mean, there's nothing new.
Yeah, man. When it comes to the human brain, there hasn't been a lot of development over the past 100 years, so
you might say that
still works. All right, next question is for your younger self. So let's go back to the Adam who is still pulling wires, way back. I think you said in the 80s. Go back to him, Look him in the eye, give him one piece of advice moving forward.
Buy everything, never sell.
Good advice. So many people say that when they come on here. Well, they say they wish they got started sooner, but I feel like holding, actually, that's a piece of advice that isn't often said, is when you buy, don't sell. There's a time and place to sell, but it is so much more valuable to hold on to that real estate because
Buy and
Time.
never sell. And I would also say take more risks.
Mm,
Don't
that's good
worry.
advice as well.
Don't worry. Be happy. It'll be okay. Take risks. Yeah.
Love it. All right, next question is we haven't really talked a lot about your investing. So this one is about that. The United States, it's a big place, a lot of opportunity. Give me the single metro, the single city you're most excited about investing in today.
Well, I would say that is an interesting question. Uh, there are no single cities. I hate to tell you that. I would refer you actually, if you want to find some really good insights, and I know that you guys are focused on multifamily, or at
Self
least a lot
storage,
of
actually. We do
multifamily.
self storage in mobile home RV parks.
Okay, so what you want to take a look at is the multilytics analytics that Origin Investments have put together.
Hmm.
So if you go, probably on their website somewhere, but if you can find them online on LinkedIn, and what their multilytics proprietary predictive technology does is it predicts rent growth
Oh,
across
interesting.
the country and rent declines, and it's accurate to within 5%. I mean, it's just they've nailed it with machine learning. And if you want to find where to invest and what markets to look at, you want to be looking at markets that are in the path of progress and that have a good rent growth prospect. And as a resource for that, go to, like I say, Origin Investments. I actually interviewed David Scherer yesterday. He told me all about it. So again, I know you've got a podcast, but he's going to be on mine next Tuesday. I know that's going to be before this one airs. But anyway, but that's a really good resource if you want to figure out where to be looking.
Yeah, I'm just pulling up the website. It looks like it's for multifamily, but if there is rent growth, that means there's growth in all the other sectors as
Well,
well.
you would
So,
imagine, yeah. And I think
yeah,
probably self-storage also goes hand in hand with multifamily,
yep,
uh,
yep,
in large part.
yep. That's a great resource. I haven't heard about this one before.
Mm.
All right, next question. Let's go to. I always lose my spot. I have this page on the right side, and when I switch out, I
I
always lose
know
where
it's
I
like
am.
exactly. I'm with you on that.
All right, this is about lessons learned. So not all deals go the way that we expect them to. So what is a deal that kind of shit hit the fan, and the biggest lesson you learned from that experience?
Yeah. This time is different, meaning the market will go down. Don't imagine that this time is different, so everything's going to keep on going up.
Ah,
This
okay.
time is different because the economics are different,
Yeah.
the economy is different, the world is different, and there will be a downturn. When I was I'm spinning back to San Diego, which is when I lost everything. I had invested in a lot of ground up multifamily deals, and on paper, had made millions of dollars. I mean, this was in the 80s, when millions of dollars meant something.
Yeah.
And I was in my mid-20s, and I had no concept that the thesis that the sponsor I was working with could fail. There was just no. It did not enter my consciousness. It wasn't. Everyone was saying this time is different. The economy is booming, population growth is increasing. We're the eighth largest city in the country. It's a diverse economy, everything they talked about. And there was no talk. Everybody persuaded themselves that this time was different. I didn't even know what that concept meant, but all I knew was that everybody was talking optimistically. And then the bottom fell out the market with the savings and loan crisis, and I lost everything. Everybody I know lost everything. And sponsors went bankrupt left and right. So you have to go into your real estate investing with a long-term perspective, period. If you go in and hope to roll the dice and come in and out quickly, you might make that work temporarily, but eventually you'll be caught short. And when you're caught short, it's not pleasant. So
Yeah.
you want to be planning for the long term, accept lower returns today in return for longer, long-term stability.
Yep.
You'll be glad you did.
Yeah, that is really good advice because it's very easy to get caught up in the hype that we're in a perfect economy, nothing's going to crash. but things always come down. Actually, I read a book recently. It was with Ray Dalio. I don't remember the name of the book, but it talks about cycles, not real estate, but just general market cycles. And he's talking about how if you look at a grand enough scheme, things are always pointed up, but there are vacillations up and down, up and down, up and down across time. And so you're always going to hit a downturn, and then it will come back up. So you got to be ready for those downturns.
Well, you got to be ready. You got to be able to survive those downturns. Yeah.
Yep. I love it. All right. Next question is about your strengths. We are all gifted with strengths that we uniquely provide this world. So what is your Superman strength?
Yes, my superpower, according to my wife, and now that she mentions it, I know she's right, is my ability to hear no 100 times before I hear a yes, and not to be disillusioned by that. It's just a fact of life. I mean, and my willingness to fail, to test, try, and fail. It's okay. I don't mind making mistakes. I mean, I don't like making mistakes, but I expect to make mistakes. Look, we spend hundreds of thousands of dollars every month on Facebook advertising. And I'll tell you the kinds of leads that we get, this for us and for our clients, the kinds of leads we get, you get at best a 2% conversion rate. That means 98 people say no. So how do you convert them? Well, like, what's the process for doing that? You don't just walk away from that. But like you said, Gabe, I mean, you said you've tried, dialing for dollars. It's brain damage. You got to be able to just, hear that no, pound sand. Sometimes you get FU emails. It doesn't matter. Just keep moving forwards. It doesn't take that many wins to change your life. So It's worth the effort.
Yeah, I feel like that's the best advice I could give my younger self is just keep going. Like, you're going to get hit in the face. Shit's going to hit the fan. But if you just keep putting the next foot in front of the other, eventually you're going to make it. So that is a good strength to have. And I can tell you're a good salesman, because that's the one strength you need right there, is to be able to hear the no's and keep going forward.
Exactly.
All right, last question is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you, learn about your book, learn about what you guys offer. So what is the best way for people to reach out and get in contact with you?
Thanks, Gabe. Yeah, so really the best way is to just go to gowercrowd.com. That's my website, GOWER crowd, gowercrowd.com. And we have a weekly newsletter, goes out every Wednesday. It's totally free, and I cover the world of real estate syndication and crowdfunding. There's all kinds of tips and tricks and all kinds of other things in there, but it's very detailed. We have commentary as well. So just sign up for that. It's on the homepage at gowercrowd.com. And then I do have some books as well at the bottom of the page. They're only $7. And if you don't like them, I'll give you your $7 back. But my latest one, Syndicate, is a good one if you're raising capital. But if you're interested in buying or investing in discounted distressed real estate, and I know you've got a program on your website about that as well. I actually wrote a book called Reality, The Reality of Distressed Real Estate. It's based on my multi-cycle experience of having seen it. It's also only a $7 book. And that's on the homepage, shows you how to find deals and what distressed real estate really looks like.
Perfect. Yeah, and that's something I love looking at distressed deals. It's my favorite thing. I've had, I've taken some hits when I bought distressed real estate. So it's a good game to be in, repositioning commercial real estate, and I'm sure that's a good book that I would even enjoy. So
yeah, I'll tell you something. It's a very complicated field. You've got to know what you're doing. The deals are in distress
for a reason,
because there are problems, and oftentimes those problems cannot be detected until you actually own it. So you've got to be careful.
Yeah. And that's due diligence is super important with those deals.
Mm-hmm.
All right. Well, Adam, that wraps it up. Thank you very much for hopping on the show.
Been a delight. Thank you so much for having me. I really enjoyed your questions. Thank you.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. And if you guys want to support the show, again, all we ask, like, subscribe, share, all that jazz. Other than that, I hope you guys have a great week. Keep rocking real estate. And I look forward to seeing you on the next episode.